Throughout history, there have been events which have changed the monetary system from that point on. Today, we will discuss 9 charts that prove the financial crisis has begun. You came here for the truth, so let me unveil that for you. Let's get into this, what I call the financial crisis part 2, but really just a continuation from what we had during the financial crisis during 2008 and onward. Let's begin with this here, showing you Greece. I did in my previous video show you what was happening as soon as they reopened the stock market. The stocks crashed. Does that surprise you? I hope not. Let's look at this. Basically declining significantly. People want to move their money out. They're willing to take any losses they can. When you impose capital controls and then you lift those capital controls, people are going to overreact. But in this case, I believe they are acting appropriately simply because of the fact that when you have capital controls, they need to get their money out. They probably need to buy things, and of course they are worried. Let's move into this. Apple not looking so good either. Despite the fact that they are the biggest company in the world according to their market cap, you're looking at this declining. I believe it was over $100 billion decline in this trading day, I believe, and what we are seeing is a significant decline, a lot of money lost right here. And what is it about Apple? Is it necessarily that they're not going to have some great iPhones out in the future? No, it is a dying economy that is really causing this to occur. Let's move on to what we have here. U.S. factory orders year over year, showing you more in the red. Now look at the last time we were in the red just like this, obviously was during the financial crisis. And the only difference was that there wasn't all of these trillions floating around in the system. Globally, you did not have the same situation yet. Factory orders down significantly again. This is a chart that I continue to show as the new updates come out, and we're looking at a dying economy. Let's look at this. As we see the ratio, the CPI rent index to the median income of these different individuals. And young people are basically suffering right now the most. Rent to income for young people, as we see individuals basically unable to afford their homes. That's one of the biggest problems that I am seeing. And we look over here to what I wrote about in my book, the housing price to income ratio. So this judges how affordable housing is or is not. Let's look at Vancouver. The median home price was 9.5 times the annual median household income, indicating a massive bubble. Canada had a 4.6 national multiple, making it seriously unaffordable. The US was at 3.3, which is apparently moderately unaffordable. This showed that basically the statistics, becoming unaffordable where the national average was 3. Or I should say the multiple to become affordable was 3. And it is at least 3 times that in Vancouver alone. But these statistics are now a few years old. That's 2010. So you're looking at it even worse. You cannot afford the homes here. Why? Because the rent or the income is not keeping up with the asset prices. This spells a bubble. Let's move on to this. Sorry, mom and dad, millennials are still moving in. The percentage of millennials living with their parents increased from 24% to 26% in the first third of 2015. People basically, they graduate from their school and they can't get a job, so they stay living with their parents. Even if they can get a job, they're so heavily in debt that they can't move into a new place on their own. Here's the charts to support that. The share of 18 to 34-year-olds living with their parents going up significantly. The chart begins in 1994 and it's several percentage points increase here. Moving on to the pricey textbooks, all interconnected as we see this. The overall inflation showing you 300% increase for the past few decades. But look at the textbooks going up 1,000%. Textbook prices have risen at more than triple the overall rate of U.S. inflation. And what we look at this US inflation rate, it is the fake inflation rate. So when we actually account for something a little bit more real, a little more tangible, you get 1,000% over this period of time. That should be sending a warning flag out to the public. Let's move over into Japan. Japan real wages year over year change, again, going downward. Real wages are hurting really bad because of their policies. You can't just print money and expect it to go into the real economy. Real wages, again, declining. And this is after all of their trillions of dollars being printed into the system, all of their activities that they are imposing. Per capita wages remain on a downward trend. Look at this here as we see the part-time workers rising so well. If that was a sign of a growing economy, they would be doing well in Japan, but that is not the case. Part-time workers are needed. Full-time workers are relatively stagnant at this point. And that connected in with that is this: senior citizens and housewives are a source of the part-time workers supply. And you could see that individuals who are elderly or into the 60 plus range are basically significantly in need right now, simply because all the other individuals are unable to find work, are perhaps under or overqualified. And what do they want? They want temporary, they want cheap work. That's what's happening in the US right now, and is no different in Japan or any other place around the world where the economies are hurting. If you found this video informative, please give me a thumbs up. I really want to see your comments on all these videos. I do appreciate it. I do read all of them. It's very difficult for me to get back to them. So what I try to do is reply to the current day's YouTube video as well as the previous day's YouTube video to sort of track back and check back on one. That's really all I have time for at these times. I'm so busy with consultations on one-on-one with people. I'm working on new material, let's just say that, and there's a lot coming out here, so I do appreciate all of that. I try to get back to you. If you ever want to get a hold of me, the best place to do so is at david@themoneygps.com. Sometimes it does take me about a week to get back to people, and I'm really backlogged at the moment. But if you do email me, I will email you back. It just takes me a bit of time, so I assure you on that. Last but not least, if you found this video informative, then I know you'll find my book even more informative. And you can actually flip through the book for yourself. If you go over to Amazon, they have this look inside feature, which allows you to look through this book and see if you like it. Take care.